Hi, today I wanted to talk about the Federal Reserve and its impact on mortgage rates. See, I've gotten a lot of calls lately from clients and customers that we've been talking to, and they're all waiting in anticipation of the Fed cutting rates, hopefully next week on September 18th when they meet. But here's the truth of the matter. Mortgage rates have already improved over the last several weeks in anticipation of that rate cut by the Fed. And that's because mortgage rates have more of an indirect impact when it comes to the Federal Reserve. There's no direct correlation to what the Fed does and what happens with mortgage rates. It's more indirect. And on top of that, the mortgage rate market, if you will, is always going to be ahead of what the Fed does. In other words, they're always going to be anticipating what that next move is, so that they're ahead of the curve and not behind the curve. So when the Fed meets next week, the only thing that they're going to be deciding is what to do with the Fed funds rate. Now, the Fed funds rate is what they charge to banks on an overnight lending basis. So they'll charge 5 3/8 to 5.5% to Chase Bank, for example, to lend them money on an overnight basis. Prime is then set at 3% over where the Fed funds rate is. So the prime rate right now, for example, is 8.5 or 3% over that 5.5 Fed funds. Prime rate is typically used on home equity lines of credit, business lines of credit, etc. So you might have some friends of yours that have a home equity line and they have, prime plus 1 floating. So that means that they're at 8.5% plus 1%, so they're paying 9.5% right now. When the Fed meets next week, it's highly anticipated that they're going to cut 1/4 of a point. If they do so, we're going to go from that 5 3/8 to 5.5 down to 5 1/8, 5 1/4, and prime will then go from 8.5 to 8 1/4. And so your friend that has that HELOC, home equity line of credit, at prime plus 1, they're going to go from 9.5 to 9 1/4 the very next day. It happens that quickly. So that is what directly gets impacted by the Fed's moves. Mortgage rates, like I said, we're already anticipating it and we've already seen that improvement. So it's quite possible that next week when they meet, and if they only do the 1/4 point and there's no additional commentary or anything, it's quite possible that rates will stay the same. Heck, they may even increase just a little bit over the next few days, because rates never come down in a straight line, as I've discussed before. Anyway, if you have additional questions on this, if this still isn't clear, please call us, text us, email us. We're always here to answer your questions, always looking to take care of you. We look forward to hearing from you soon. Have a great day. Bye-bye.